I'm Charlotte McLeod with investingnews.com, and here today with me is Gary Savage, president at the Smart Money Tracker newsletter. Thank you so much for being here. Great to have you.
Well, thanks for having me on, Charlotte.
Really good to be speaking with you. I think that probably many of our viewers will be familiar with you, but I thought just because it's our first time talking, if you could start with a brief introduction to yourself and your background and a little bit about what you're doing right now in terms of your work.
So I've been publishing the Smart Money Tracker newsletter since 2007, I think it was. Now I do analyze multiple markets. I do the stock indexes. I don't do individual stocks on anything. I'm not an individual stock picker. I do the ETFs. So I analyze the stock market ETF or the indexes, a little bit in the energy markets, a little bit in Bitcoin, but I am mostly focused on the metals right now. And I will be for the next 2, 3, 4 years, simply because gold last year broke out of that, whatever it was, 11, 12, 13-year base. It held that 2000 level. I think that broke the banking cartel manipulation in the gold market. And I think that's one of the reasons we've had such a powerful and explosive rally over the last year, in 3-4 months, whatever it's been. And so I'm mostly focused there because I think that's where the big gains are going to be over the next 3 or 4 years.
Okay, really good context on yourself. And in alignment with that, we will mostly focus on gold and silver today as well, although we'll see what directions we go in. So beginning with gold, you've been talking already about how gold has been on this run recently. And we'll start with a broad question, I think. For you, when you look at gold, where is it in the cycle? I know I've heard you speak elsewhere about 8-year cycles. So maybe we could begin with that.
So this is one of the reasons why I think we've got at least 2 or 3 more years to go, is we're still fairly early in a new 8-year cycle. The 8-year cycle low occurred in October of 22, or maybe it was 23. I can pull the chart here in a minute, but anyway, so I think it was 23. So we're a little over 2 years, whichever one it was. We're a little over 2 years into that cycle. I don't know that I've ever seen a cycle top shorter than 4 years. And since we're in a bull phase and a breakout phase, I kind of think that this cycle won't top the 8-year cycle for 5 to 6 years. So that's probably going to put us out to maybe 2028, 2027, something like that. And I think we'll get our final blow off kind of parabolic bubble top during this 8-year cycle. But I think it's too early for that right now. So I'm still looking for somewhat normal corrections that you get, an intermediate correction about every 20 to 25, maybe 30 weeks if it stretches a little bit. But at some point that'll all break down, and we'll transition into the parabolic phase where we'll probably gain 100% or more in a year or less. But I still think that's several years away.
Okay, so we're right now in terms of gold, we're quite far out from the top of the cycle. I think when you talk about things like that, people always want to know, okay, so what's the price potential here? So curious to hear about that from you, and maybe a little bit more about the path to that price that we eventually get to.
So I'm on record. I think $10,000 gold is a realistic target. We might even go much higher than that. The metals market has been suppressed for many, many years, and it finally broke that suppression in 2000. That's the reason why we've had such a powerful and aggressive move up, is because the gold especially has been it's in a short squeeze. The banking cartel got stuck in their shorts, and they've continued to try and fight this, and it's just ignited a huge short squeeze that sent gold from 2,000 to 3,500. The miners, I was kind of thinking the miners would be the last to break the suppression, but I think they're breaking it right, or they did during this intermediate cycle. I think they kind of broke free of the suppression. Silver it has not broken the suppression yet. I thought it would be the second to break it, but it has not. They are keeping it locked below $35, and they're also keeping it blocked below $33. So it'll have to be another intermediate cycle to break that.
That's really interesting. So gold you feel has broken out of this manipulation. Gold stocks maybe in the process of doing that right now, but not silver. Any thoughts on why control has been able to still be exerted over silver? Why is that the one that's lingering there?
Yeah, that's an easy one. It's just a thinner market. It's much easier to control. And, the rules are just not enforced at the COMEX. So the banks can just, they can dump, I think the rule is you can't trade more than 3,000 contracts. Well, you'll see in the middle of the night, they'll dump 15 or 20,000 contracts. And that's enough to suppress the market. So in the morning, you get the market's way down. There's no bid, and retail traders and hedge funds will panic first thing in the morning. That exacerbates the selling, and that's how you control the price. But by the same token, when the suppression does break in silver, the short squeeze I think will be much bigger than what it's been in gold, and that's I'm also on record that $100 is going to be a piece of cake in silver, and I think probably $500 is likely. Sometime, maybe in 3 or 4 years from now. Now that doesn't, people, when I say it's going to be a piece of cake, that doesn't mean it's going to be an easy move to get there. It will be difficult. And as this bull market matures, it's going to get more volatile, more erratic, and more difficult to trade. So when I say piece of cake, all I'm saying is it's going to get there. Doesn't mean that you're going to have a picnic on the ride there. It's going to be anything but a picnic, but it'll get there.
Okay. I think that's a fair statement for sure. So when you're doing your technical analysis, looking at the charts, how do you account for factors like manipulation? How does that play into it when you look at it?
Well, when I get an intermediate cycle low, that's the banking cartel doesn't really stop the intermediate cycle rally, but they can suppress it to some degree. And I think that's what happened with silver during this intermediate cycle, because gold went to 3,500. But silver, it had one day, maybe intraday, where it broke out above 35. Minus the suppression of the silver market, I think silver would have gone to 40, maybe even $45 following gold higher. But they blocked silver at $33 for about 6 weeks. And wasted 6 weeks of that intermediate cycle while gold was going up steadily, and the miners were pretty much breaking free at that time as well. So they just managed to suppress it for too many weeks, and we just ran out of time. And now I'm pretty sure the intermediate cycle in metals is topped. So we're going to have somewhere between 4 and 8 weeks of the metals pulling back and correcting. Maybe gold gets back down to 3,000, maybe 2,800, but that's a good thing. That'll clear sentiment. And right now, everybody's extremely bullish. Everybody is looking to the moon, and when you get to that kind of sentiment levels, you're kind of at a level where you're about to run out of buyers. There's nobody left, and this is the point where people are, imagining fundamental reasons. The Asians are buying, and that's why price can't go down. Those are just narratives, but that doesn't stop the profit-taking events. There will be a profit-taking event until we get into the bubble phase. And then when we get into that, then sentiment really doesn't matter. Cycles don't work anymore, and things just go straight up. And, who knows how long it can last. Usually from the time it really starts to go, it'll be a year to a year and a half. But right now, I still think we're in the middle part of this breakout, and we should have normal corrections. And that resets sentiment, and it prepares you for the next leg up. So if the top was 3,500, then I think the next intermediate cycle could take us to 4,000, maybe 4,500.
Okay, yeah, I think that definitely sounds reasonable. And I'd be interested to know, so you're looking at the charts, and I know a lot of the time when people are doing technical analysis, they like to ignore external factors. And you're mentioning these narratives just now that are, people have popular things that they like to talk about from day to day. So how much attention are you paying to those types of narratives that come in about gold price drivers, silver price drivers?
Zero. That's meaningless to me. I don't worry about that stuff at all. If I did, I would get caught at tops. I would buy into the narrative that the price can't go down because of such and such a reason. And then you get caught in an intermediate degree correction. And, those can shave off 15, 20%, more than that in miners. And they usually run 6 to 8, sometimes 12 weeks. And, it's not the end of the bull market, but it is kind of painful, especially if you're in leverage. If you get caught in an intermediate degree correction in leverage, that's very painful. And then the sentiment is the exact opposite at the bottom of those intermediate cycle lows. People now they're listening to the narrative of why gold can never go back up, and then they panic sell right at the bottom, and then they're shell shocked and they can't buy back, and so the bottom forms and we start to rally, and they've still got the memory of that 8-12 week decline. And so they're not looking up, they're looking down. Like they're expecting more downside, and they've bought into the bearish narrative at this point, so they can't buy. And usually what happens is it takes multiple weeks before the confidence starts to return. And then generally what happens is right about the time they buy, then we'll get like a minor daily cycle correction. And so that reinforces their feeling that, oh, we're going back down. And so they end up buying a little bit too late. They get dragged down into a daily cycle low, and they panic. They sell at the bottom of that, and then we bottom and we continue back up and we make higher highs, and then it takes a little bit more of a rally for them to gain confidence. And this is how people lose money long in a bull market, is they wait a little too long to buy. They buy right ahead of minor corrections or a major intermediate correction. They get dragged down into those corrections, and then they sell at the bottom of them.
Yeah, I think it's very easy for people to get stuck in that kind of trap. So really good to go over that as well. So we have gold essentially heading into uncharted territory, but I see people a lot of the time trying to find analogs to different decades or different periods of time in the past. Do you have anything that you're looking at that you are thinking, okay, right now looks similar to what was happening at this period of time, or is it really this is a new scenario right now?
Well, the markets rhyme, but they're never the same. So I'm not gonna look at the 1970s bull market and assume that this one's going to be exactly the same. It won't be, but you can kind of make some generalizations. One of the rules is the bigger the base, the higher in space. Well, we had a massive base in gold from 2011 till it finally broke out, and a sustained broke out last year in March. So that's, what is that, a 14 year base? And that's one of the reasons why I think 10,000 is a realistic target for this. Again, it's going to take several years to get there, but I think it will get there. And a big part of that is just the huge size of that base. And then also the degree of suppression in the gold market is going to make this exacerbated and make it even, maybe that's the reason it goes to 20,000 instead of 10, is because it's been suppressed for so many years.
Okay, and I want to take a little bit more of a look at silver as well. So we hear a lot of people talking about the gold silver ratio right now. It's very high, and that is signaling for some people that there should be this move coming in silver. And you've kind of talked about your outlook there. But do you have any sense of timing on silver? Because I also hear, okay, we've got the ratio very high, but I also hear that silver tends to move toward the end of the cycle, which would seem to indicate that it'll take some time for it to actually move. So what are your thoughts?
It does usually. So typically at towards the end of an intermediate cycle, maybe the last 3 weeks of an intermediate cycle, that's where gold is getting expensive, and traders are starting to look at silver because it's cheaper. And so some of that liquidity will come out of the gold and the mining markets or sectors and flow into silver. And it's a thin market, so it doesn't take much liquidity to really make that the silver market ignite, and you get some big moves. And that's what I was expecting to happen here in silver, but it just didn't happen. So I think it's going to be the next intermediate cycle. We'll get a breakout above 35, and maybe we'll get to 50 by the end of the year.
Okay, we'll see. I think that would definitely be something that people would like to see. So keep an eye on silver. I think we should talk as well about what's going on in the US stock market. You'd mentioned you pay attention to the indexes. So from a technical perspective, what are you seeing in terms of the outlook there?
So stocks put in an intermediate cycle low 3 weeks ago. Um, the bull market in stocks is still pretty tame by historical precedents. The last two bull markets gained from the bottom. In our case, this would be 2009 to the top. 20 fold gains, 20 baggers. The S&P is only at about 8. So I think we got further to go in the stock market. I know a lot of people are thinking that we've started a secular bear market. I don't think we have. I think stocks are probably going to come back up and make higher highs. So, if you're in 401ks, and I don't think you need to sell yet. I think we got further to go. Now, we may have a cyclical bear market if the war in Europe spreads and we get a recession in Europe, it'll infect the U.S. We'll have a cyclical bear market. I don't know that might happen later this year. Could happen in 2026, but I don't think the long-term bull market in stocks is over just yet. I think we need a true bubble phase, something like what we saw in 2000, where everybody and their cousin is buying AI stocks or robotic stocks, and things just get so wildly overvalued that it's just crazy, and prices stretch 60, 100% above the 200-day moving average. We haven't seen that at any of these tops yet, so I think we got further to go.
That's interesting because it felt a little bit before like we were getting into that AI bubble where everybody was talking about it and things like that. So you still see that there could be more to come in terms of that, and people could stay in the stock market right now if they wanted to.
Yeah, I don't think we're starting a secular bear market. Like, we started a secular bear market at that top in 2000, and we had 9 years of up and down, two vicious bear markets, going nowhere for 9 years. And then we broke out of that and we started another secular bull market. And I think we're still in that bull market. Like I said, the last two lasted 20 plus years, and they gained basically a 20 bagger. And we're just not there yet. So I think we got further to go. And I didn't really, things get a little overheated, but I didn't see bubble behavior.
Okay, we'll keep an eye on that as well. I'm curious, we talked a little bit about the gold and silver mining stocks. So as we're moving forward, do you see them behaving more following gold and silver, or is there a time period where they'll follow what's going on in the stock market when we get to the point where we're kind of going down there?
Mining stocks don't sell the stock market. They sell gold and silver. So they follow gold and silver. Now, I will say this. If gold is going sideways and the stock market is having a severe correction, then the selling pressure can infect the mining stocks, and they can go down even though gold isn't really going up. Now, if gold is going up, then the mining stocks are going to go up. They're not going to care what the stock market's doing. But for the most part, they follow gold. Unless you get into that specific situation where gold is going sideways and the stock market's having a big sell-off, then they can get infected by that. But right now, I think stocks are going up. I think the mining stocks are probably going to go down because I think gold and silver are going to trend down for a month or two.
Yeah, so we've got that potential buying opportunity there.
Yeah.
We also said we'd take a look at what's going on with Bitcoin. So this is less my area of expertise, but tell me what you see coming there in terms of Bitcoin. Curious to know what's happening.
So Bitcoin is the same as the stock market. It put in an intermediate cycle low 3 weeks ago. It kind of almost tested 100,000 several days ago. I kind of expected a little pullback from there, and we did get a little pullback, but it was pretty small. It didn't amount to much. And then, if I remember right, I took a quick glance at it this morning, but I think it's breaking through 100,000 this morning. So I've got kind of a general target, maybe in the $120 to $130,000 range for this intermediate rally. So I think both stocks and Bitcoin have more weeks to go. It's very rare that an intermediate cycle would top on week 3, even if the cycle was going to left translate, which would be a bear pattern. They rarely top in less than 6 to 8 weeks. So, even if this was going to roll over, left translate, and then come back down and make lower lows, like let's say Bitcoin was going to go below 75,000, the S&P was going to go below the low of 3 weeks ago, I still think it would rally at least 8 weeks before you got that top. So, and I don't necessarily think that's the case. I think we're probably going to make new highs. So I think stocks probably have 10 to 15 weeks, and Bitcoin 10 to 15 weeks to rally before they roll over and turn back down. Now, that doesn't mean they're not going to have a minor daily cycle correction, which they will probably in a week or two. That'll be somewhat scary. People will think that that this is it, the top has come and we're rolling over and heading down, but probably not. It'll probably bottom well above those April lows and then go on to make higher highs again.
Okay, so for Bitcoin, you mentioned, all right now it's kind of moving with the stock market. Overall, how do you see it? Because I know other people, they are looking at it as a kind of a safe haven, like a similar to gold type of vehicle. How do you view Bitcoin?
Well, I don't necessarily view it as a safe haven, but it's a trading vehicle. It's a good asset for speculation. And when it puts in an intermediate cycle low, it's just like anything else. It's a buying opportunity for multiple weeks. And like I said, pretty sure Bitcoin put in an intermediate cycle low 3 weeks ago. So I think you still got good potential in Bitcoin. I don't think you have to worry about that you're buying too late. I think you got plenty of potential here. I can't tell you for sure that if you buy today, you're not going to have a down day or two, but I am pretty confident saying even if you buy today and it's down tomorrow, that 5 or 6 or 10 weeks from now, you're going to be up. You'll probably be up around 120, 130,000. So I don't think you have to time a perfect entry to make money in either the stock market or Bitcoin right now.
Okay, so we've got stock market and Bitcoin. These are a couple of opportunities that people can look to get in right now, whether or not they time it exactly perfectly. We've got gold and silver looking like they're going to be taking a little bit of a break here for a moment. Any other areas of opportunity that you're seeing right now that you think investors should know about?
Well, I don't trade currencies myself, but it looks to me like we had a false breakdown in the dollar, and that the dollar's probably put in an intermediate cycle low. So I think this is part of the driver for metals to correct is we'll probably have a 6 to 8 week rally in the dollar. And then as that unfolds, I think that's probably one of the drivers for gold and silver and the mining sector to correct for 6 to 8 weeks while the dollar's rallying. But the one factor, I think, important factor in the dollar is it made a lower low. So it looks like to me that we have a failed 3-year cycle in the dollar. And generally that means that the rally will not make a higher high. And then when we roll over and we get the declining phase of the cycle, it will come down and make lower lows. So right now it's a false breakdown, but I think 20 weeks from now or something like that, I think the dollar is going to be making lower lows than the low it made 3 weeks ago.
Interesting. And do you pay much attention to what's going on in the bond market? Because there was all that turmoil a few weeks ago at this point, I believe. Are you tracking that?
So I don't trade bonds at all. It's just not my thing. But I will say that I'm convinced that we're in a long-term secular bear market for bond prices, bull market for rates. So over time, I think interest rates will be going up. I think we're in an inflationary cycle. I think we will be for multiple years yet.
Okay, okay. And so we're taking a break in gold and silver right now, as we've mentioned. Longer term, they're going much higher. Do you see the rest of the commodity sector, for the most part, rising in tandem at that time in the future?
Um, Gold can disconnect in the intermediate term a little bit. Like right now, I think it's Bitcoin's turn to go up and gold's turn to correct. Very often it'll kind of do the same thing with oil and gold. They'll kind of move maybe a little bit inversely, but generally speaking, I think if gold is in a long-term bull market, then the commodity sector is also in a long-term bull market, which I think it is. I think commodities, the general commodity market bottomed in March of 2020. That was the bottom of the commodity bear market. Oil went to negative $30 or $40, whatever it was. I mean, if that wasn't the bell ringing that the commodity bear market was over, then I don't know what it was. So I think we're in a commodity bull market. I think we're in an inflationary cycle. We're in a war cycle. And so I think commodities are going to be generally moving higher for the next maybe decade.
Yeah, yeah. Okay. I think that was kind of what I was getting at there. So that makes a lot of sense. Are there any commodity standouts for you in that time period other than gold and silver?
Absolutely, gold and silver. And the reason is this,
Okay.
because of that base and the breakout from that cup and handle pattern. That's why I am mostly focused on the metals right now. So for my subscribers, when we're in the advancing phase of a gold cycle, then that's what we're focused on. We're just tunnel visioned on gold and miners and silver during the advancing phase of an intermediate cycle. When we get into a declining phase, then my advice is I stress, just don't lose a lot of the gains that you made from the advancing phase of the gold cycle. If you want to trade the stock market a little bit, or you want to trade Bitcoin a little bit, I'm okay if you take some modest positions. Just don't take any big losses. So hold on to those gains, and then when we get to that next intermediate cycle low, then we step on the pedal hard again, and we use some leverage, and we play the next rally in gold. So I'm tunnel visioned on the metals. When it's time to take a break in the metals, I'm okay trading other things, but I really want people to trade fairly small and just make sure they don't lose any significant portion of those gains. And we've had some really good gains off of this first half of the year in metals. Most of the subscribers, depending on how aggressive they were with their leverage, they're up anywhere from 25 to over 100%. I just don't want people to lose that, trying to double up somewhere else when the big potential's in the metals. And if you can just be patient and wait for the next buying opportunity, then we'll do it again in the second half of the year.
Absolutely. And do you find when you're talking to people about having this type of mindset that allows you to be successful, are people receptive to that? Or, it's easy to fall back into those bad patterns. So what do you tend to see?
Well, I suspect many retail traders, they have a gambling addiction, and they want to bet big on every trade. I try and break people of that. There are times to bet big, but a lot of the times it's not a time to bet big. Like right now, I think is a time to just try and get a base hit. If you want to get a base hit in Bitcoin, or you want to get a base hit in the stock market, I'm okay with that. But the time to swing for a home run, for me anyway, is when gold and silver and mining stocks set up their next intermediate cycle low. That's when we swing for the fences. Right now, I would prefer that the traders don't swing for the fences, because if you swing for the fences, you can strike out. And I don't want people striking out and losing that 25% or 100% and then having to start over from scratch again during that next intermediate cycle low. So that's kind of what I try and stress in my newsletter. I try and get people to to control greed. When it's time to be cautious, then we're cautious. Don't swing for the fences. When it's time to swing for the fences, then by all means, swing for the fences. We'll hit another home run. It's not that time right now.
Not right now. All right. Well, I feel like we came a little bit full circle in terms of gold, silver, and your strategy. So I'll let you go unless you had any final thoughts that you would leave investors with.
I think we covered it pretty good. Yeah, just right now it's time to be a little patient. Probably, I'd say maybe June. It'll be time to swing for the fences again.
Okay. All right. June is the month that we will look for, and it's really not that far away. So that's the message. And thank you so much for coming on to talk. This is really good. I think I learned a lot.
Yeah, thanks for having me.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Gary Savage with Smart Money Tracker.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.